What's going on, everybody, and welcome to another weekly update. And in this video, what I like to do is provide you some information from the upcoming week, whether that's events, earnings, whatever the case, to get you prepared for the upcoming week. What I also do is provide daily updates to get you prepared for the day and the week ahead in this phenom market. Looking into this week, first thing is first, I'll go ahead and pull this up. There's not a whole amount of events going on this week. It is Jackson Hole, so you're going to get a lot of Fed speakers. So the market could get very volatile in general. Uh, but primarily on Friday, we do have Powell at 10 a.m. Eastern Standard Time from Jackson Hole, kind of giving an outlook on the economy. So this typically has a lot of weight in general. I just said that there wasn't a lot going on this week, but the Jackson Hole event is big because it kind of prolays essentially what how the Fed mindset is thinking, and people have been going off of data to try to assume what the Fed is attempting to do in the next move. Now, what we did have this week, which was interesting, was Bullard came on and said more than likely it'd be another 75-point basis move going into the next meeting. And so that kind of leads me to believe, since we got another core CPI before the Fed's at the end of next month. Earnings are starting to slow down. So this week we do have NVIDIA and Snow are what I'm watching on Wednesday after the bell. But it kind of, well, the way I've been looking at things and trying to understand why numbers are looking positive, right, there is a lull in between inflation pumps. So you have to keep that in mind. It could even go a couple of reports and then all of a sudden it spikes again. It just really depends. We're still seeing a lot of, but what we're kind of seeing is that, or my thesis, and something I've talked about a couple months ago, was, and something I was made, I started looking at was essentially that, we've been giving uh, billions and billions of dollars to Ukraine, and my thing is that I've kind of noticed it's been a lot more frequently happening, and every bill that essentially comes out is almost essentially dishing out more cash to Ukraine. And a question I was asked this past week was, okay, well, how the thesis originally was that we were giving money to Ukraine to essentially um, combat inflation, and how is that really combating inflation by giving away all this money to Ukraine? Essentially, you have to find demand, right? Right now, there is no demand for anything. We're seeing demand destruction because of oil being so high, people just not going out, traveling nearly as much. And People could potentially, again, another thesis could potentially be working 2 to 3 jobs. That's why numbers have been pumping. Um, but how can you artificially inflate the demand by dishing out billions of dollars to a country that needs it because the country is at war? And then in turn, they come back and use that money to buy supplies from you. We have seen exports go up quite a bit. I believe it was somewhere around 34%. And so I think you're kind of artificially inflating that demand to do that, and in turn, kind of helping numbers that aren't really there to help prevent any kind of panic in the market, right? Because everything that's going on, you still also have the Fed screaming from rooftops, which is actually funny because they said they had a control of it just a couple months back, and then now, when people are thinking that we've hit peak again, they are screaming from the rooftops that inflation is not coming down, that they will continue to be hawkish. And then people are saying, well, the Fed is over compensating for everything, and something I've talked about, that they would continue to do that even before they started to do that and started to talk about this. that they were going to do that. Even Kathy Woods had mentioned this many months back, that she felt that they were going to do the same thing, that they were going to front run this thing until it comes down. And there's no way of knowing it comes down until you get some time to determine if it comes down. And so, just because we have one report that comes down doesn't mean inflation's over. Again, it comes in cycles. You can get a couple of cycles where it's fine and getting better, and then all of a sudden, it's again inflation's through the roof again. But one thing you have to keep in mind is the dollar's been sitting kind of flat, roughly around that 106, 107, and then it started pumping again. Um, and going into the winter months, right? You have Germany, which I believe has only got 2 months supply of oil going into the winter months, and there's going to be an issue. We also had Ukraine, or not Ukraine, excuse me. We also had the UK announce they hit 10% inflation, which they haven't seen in 40 years. Um, no, these are things you have to watch, right? The world is the inflation rate around the world is getting absolutely absurd. Yes, we're artificially inflating our numbers to make it look better, right? Because we have demand destruction. We've seen that in oil, food, and energy continue to rocket, and okay, again, you'll get lulls, right? Just because we came down to 8.5 inflation doesn't mean, yay, we're doing good. It's still horribly, it's really bad, right? And so, um, just because we're hitting expectations, and that's kind of what how the market moves, is if we can have really horrible expectations, then if we hit it, then the market kind of feels like we are at least projecting correctly. And so, unless it's out of left field, is when you start introducing panic. Oh, well, we didn't expect that. Well, if we're expecting crap numbers, then we're going to get crap numbers. So, this is kind of where we're at. Jackson Hole could provide more insight. You might get a lot more volatility to the downside. Something I've been talking about coming into these upcoming weeks is that we need technical wise, we need a pullback. It's just natural pullback. Now, will that accelerate? It very well could get some gas this week, given its Jackson Hole. But then also, with that being said, um, we have another core that the market is looking for. We want to see if it comes below 8.5. Again, people assume if it comes in either at or below expectation, that things are getting better, that we're still judging the markets correctly, and that our future rejection is still on target. So if it's off target, again, that means the Fed doesn't know what they're doing, and so the market panics. Um, so we'll have to see. We'll have to see from this point what this week will bring. Again, you'll hear a lot of Fed members and Bullard already speaking, and then we got again Powell on Friday, so that will be interesting to see there. As far as watch list, again, I'm just keeping it very general market sentiment, tech, value, and financials. So we got 82 on the general, 51 on tech, on Tesla. BA is 7 and JPM is 3. I believe Tesla's actually stock splits for the end of the week as well too. I think it's on the 25th. So that will be interesting for Tesla as well. So in general, technical wise, here now trends really haven't mattered. Even going to the upside, any kind of break. Normally, again, you would retrace 75% of that move, but we haven't even been getting that. We'd be lucky if we get even like 10% of that move. So we need to watch this again. We have a strong support roughly around that 4,200. If that does break, I can see us coming all the way back down. Again, I think this week could potentially give that gas to push it to the downside in Jackson Hole. Just if again fear starts talking about recession a lot more, and what comes with that. Again, I do believe we're already in a recession. It really just depends on how long we stay in here. Again, if we're continuing to get rates from the Fed, it's going to drive us even further in. They've even mentioned that in the meeting notes this week, that they realize that the raising of rates, the damage it does and could lead us into recession. They talked about other diseases as well, potentially going forward. They talked about the potential conflict with China or anything like that. So they're all well aware of these things and things I've talked about multiple times. If it does happen, could provide a new catalyst that would introduce panic into a market that is just trying to that's been running off of hopium and now introducing more panic. So just be mindful of that. Could scare people even more. So sometimes it's just one piece of information that could even introduce even more panic than there already is, and include that old panic that was once there. And again, you could lead to some bigger moves if that's happened. So again, technical wise, watching the 4200 to the upside, we really have to break roughly with that 43 hundred mark, and we have to stay above that. I think a clean break and could get us to the upside. Otherwise, if we get a break from the 42, again, it's not going to be a clean shot down. It really depends on what kind of gas we're using to go to the downside, or events, I should say. But so that's what I got for SPX and the general index. Again, the dollar still very is high and continuing to push. Bitcoin again breakout. I called this last week, and this broke retest. This is normally what happens on this. This is a normal move. This is what I'm talking about, normal moves. You have the trend break, and you go almost 75% of the move. So you would look roughly around here, around the 20K mark. So I'm expecting Bitcoin to hit 20K and then go from that point. So again, that support is I would say roughly around that 1900. If we get a daily candle open below 1900, I think that would lead to more downside selling. Again, I think we could potentially continue to do that. Again, I talked about this last week. Everything started looking exactly the same again. And when things look exactly the same, that means you're going to get a big move to one side or the other. More so, I should say, not one side or the other, but I should say more so to the downside, because it means there's a lot of fear in the market. When there's a lot of fear in the market, everything looks the same. And so that's what we got for that. As far as Tesla is concerned, Tesla is been kind of in this range. So really this week, I think what's kind of holding this up right now too is a stock split, uh, which again is on the 25th, so Thursday. So for Tesla, I think we need to break below, because you got really strong support here at the 840 mark, but we've held it once. We've already tested it once, so now we have a higher chance of breaking this. Right, the first bounce is you have a high rate of chance that this thing's gonna bounce. Now on the second to third attempts, the chance that it's going to bounce reduces dramatically. So a second bounce and potentially, again, what this downside move is being fueled by could break this pretty easily. So just be mindful of that. So the 840, looking for that to break. If it does, again, you get support at the 750, the 680, and then the 625. Again, you have a lot of different support levels here, so just be mindful of that. And then let's take a look here. BA is the other one I have. BA, let's go ahead and type this one in. If I could type. All right, BA for this one, same thing. Like I said, everything is looking the same. We got another technical break here. You want to draw it out. When everything looks the same, that means there's fear in the market, and you got a break. This you could potentially see a retest here, and then a fall. So we have to see if we even do get a retest here. But if it breaks below the 164, you got support here. You got pretty tight support here, so it's not, unless there's some mean gas at the downside. It's going to be a very staggered drop. So you got 155 here. You got support at 140. Another support at 126, and then 115 is your other support. So again, we've had a nice run here. I'm expecting a move to the downside here. So expecting some sort of at least pullback. I'm not saying we're going to flush again. If we start getting some really bad news, we could flush, but I'm expecting a normal, healthy pullback as of right now. Again, unless the sentiment of the market changes, so we have to see there. And then what I got is JPM. JPM breakout, something I've talked about, 75 points on any technical breakout. We haven't gotten that. Now we're kind of looking like a natural pullback here, but if it can't hold 117, I could see us headed right back down to 112 this week. It could be a higher low, so that's one thing you need to be watching here. Is if it does hold here, the 118 mark, we could be potentially making a higher low, at least potentially aiming for that 131. So we'll have to see there. But if not, we start breaking down, start seeing some of these over older levels again. Something I've talked about, these breakouts, you get these false breakouts, and they break right back down into these descending wedges or downward channels, and then continue down. So that's pretty much what I got for this video. I don't want to make this video too long because, again, a lot of it depends on what happens this week. There's no real big earnings or anything like that aside from Jackson Hole. A lot of eyes on Jackson Hole and the next move from the Fed. So when we get that, then we'll be able to determine if we're going to continue this thing up or if we're going to see more downside selling. But right now, things, in my opinion, are not looking good. But we'll see. We'll see how it plays out. So again, not trying to be neutral in this market and take it from there. Take it day by day. That's why I do daily updates. So we'll see what happens. But until next time, I'll see you guys later.